Hey guys, it's Kieran. I'm just going to do a quick market update. So far we've been in the sideways range for a really long time, and pretty much starting from March to April. And of course, in the more recent 1 hour time frame, we've had this recent dump around here and all the way bringing us to the support. You have to appreciate that every key level has an expiry date eventually. Looking at this chart, we know that this 27.1 to 27.3 region is a key level support, and on top of that we have this key level support around here, specifically in the 26.9 to 27k region as well. But if you also notice, looking from this chart, when we actually had this run up back in March, there's actually very little support left behind structurally, and this is a huge imbalance. And what I mean by this is that, very often you have this quick movement up, but there's not enough time for the actual pushback down to close this gap, and this hasn't happened. So structurally there's very little support here, and also there's very little support here as well. But you also have to appreciate that range is still range until it's broken. Something we've actually learned in this year, particularly if you go back in February and also January as well, when this particular bar pattern happened here, similar to the current one we have here, roughly potentially some kind of head and shoulder formation as well, shoulder here, head here, and left shoulder here. What we learned from this price action back here is a couple of things. Number one is the range is still a range until it's broken. It's so hard to predict exactly when the range is going to be broken, and sometimes it can be very often a black swan event or some kind of news event that triggers it. But very often the chart action already gives us a heads up. Another thing is that a lot of people were shorting the support the first time around. By the time this happened, it was more kind of, eventually people became exhausted. And this is something also from 2019, 2020 and 2017 last bull run, in which a lot of the time people were very adamant that Bitcoin had to break from 6k to 3k. But the problem is that by the time it happened, whilst these people were correct, they were just so exhausted and they eventually just had fatigue. And you have to appreciate that the range is still the range until it's broken. So what are some potential scenarios looking at this chart? Well, if we break below this level, and definitely this level, then there's very little on the way till 24.7. I know a lot of people are looking at 25.2. It's a very nice rounded number. But personally, and I'm going to talk on other things, but structurally there's very little on the way till 24.7, but also 21.1. We also have a key monthly level as well, that I believe that if we break down below 27.8, that's going to target as well. And of course, for a long time, this region here, the 23.1, was key monthly opening closes for several months. So that is going to be a key level as well, that can a potential take profit. But as of right now, I know it's easy to get bearish, but I'm not going to get too bearish until we actually break support. And what are some potential actual practical scenarios here? A potential situation could be you might get a push down like this and grab some liquidity here and here. And then if there's a quick snapback up, then you might consider an actual long trade. So if I draw a fixed volume range from where we found support here to this current price action here, if we do get that pushback down, a quick wick back up, somewhat like a false break, then you might consider a long position, and potentially the long position here, and you can move the stop loss to perhaps 26.4. I take the first take profit around the point of control. Next take profit, maybe a key Fibonacci. If you draw it from here to here, key Fibonacci, one of the key Fibonacci's, you might take profit. Next take profit, you might take at the value area high. And the last couple of percentage, you can just leave it to run. And similarly, if we get a pushback up, and because we have to appreciate there's a lot of liquidity lying in this region between 29.6, 30k region that hasn't been tapped for a long time. Then you could open like a head short if that happened as well. And again, same process, take profit. And that way, whenever the breakout does happen, you're covered. Looking at a more macro point of view from Bitcoin, I spoke about this harmonic so many times. This is a shark harmonic, and it is actually bearish. But the problem is that you can never know exactly when the breakdown is going to happen. And the D is pointed as here, but D can still go a bit higher to 31, 32k, and it could still be valid. And so that's the thing we have to wait and see. If there's a breakdown right now, I would expect the 24.7 region as a first take target, and the next target could actually be 23.1, last one 21.1. And of course, we've had a huge run up in Bitcoin, like 100%. And if you have a pullback like that, it's not out of the realm of possibility. But until the range is broken, I'm not going to get too bearish, and support is support. And you have to appreciate how you can have so many different biases in trading. For example, in the 1 hour time frame, we're trending downwards. But specifically in the 4 hour and daily time frame, it's still a sideways range for a really long time. Whether this is some kind of head and shoulder, perhaps, we'll see. And I know a lot of people are talking about that. Looking at the 5-day Gaussian channel, which really helps look at the more macro point of view, I always explain my statistic last couple of weeks, and the statistic is that once Bitcoin breaks above the 5-day Gaussian channel, and then has a retest like we did in March, statistically there's usually a run-up of 30 to 40% on average. So far from the top band, we've actually had like just under 20%, and so we haven't actually reached the target yet. Question now is, do we get some kind of actual push back down here to the top band, which is not on the realm of possibility. And the top band of this 5-day Gaussian channel is around 25k, and I know a lot of people are looking at that. The mid band is 21.8k, which is interesting as well, and the bottom band is 18.8k. Perhaps we get that final rally or pullback maybe around 21.8k region. Personally, if we do break below 26.8, I think 24.7 is quite imminent. When does the range break, really? That's the main thing. And looking at the weekly Gaussian channel, so far the top band is around 30.3k, which is a key weekly level as well. It was like the weekly open and close here, the 17th of April. And the middle band is around 25.5. Potentially these are some pullback regions. And if I draw Fibonacci from the bottom here to the cycle low for this year and to the top, we're still at the 236 Fibonacci. We haven't broken below that, and the 382 Fibonacci is around 25k. So yet again, we see these numbers cropping up again and again and again. And one of the strong markers of a bull trend is you hold above the 236 and 382. And so far we are doing that. And now looking at a more local time frame, specifically this 4-hour consolidation range we've had for a really, really long time. If I draw the Fibonacci from this point to here, you can appreciate that we are at the 786. So potentially, perhaps there could be some kind of reaction. Sometimes we do see these 786 and 886 regions being respected a lot. Perhaps this could be some kind of bounce. But that doesn't mean you're going to blindly long, right? You have to be very careful of shorting your support as well until you get a clean break as well. But so far, it is consolidation range until it's otherwise broken. And for all we know, we could have another leg up again to 30.5 and then have the breakdown. And so far right now, I'm still my head short from 29.9k. I built up a partial position. I did have some long positions, but they got stopped out after the first take profit being hit. Looking at the wider market, specifically the S&P 500 index, of course, I spoke about this somewhat of a compression we've been having for a very long time. We have this macro support coming as a diagonal, this yellow line here. And we initially had the rejection. We pulled back down and we went back above. The question is, do we retest this? And if we do retest this, a run up at 4.3k is definitely possible. You cannot rule it out. Above that, the next key weekly level is around 4.7k. That is a bit of a stretch, particularly this year, but perhaps later on. But it seems 4.3 is not out of the realm of possibility. And of course, it's a symmetrical triangle. You also have to be wary of certain fake outs. And for example, we haven't completely filled it here, but sometimes you might get a move up like this and then a fake out back down, and you might get a move back in again. So that's just something to consider. And it's very important to pay attention to the volume as well. Let's see if we can form support here. And sometimes that might be a precursor to Bitcoin's action as well. Looking at certain other things also, looking at the fixed range volume. So this is looking at the transactions, and you can see in this particular, I've taken it from this 11th of May 2022 to this range here, and the value area high, so essentially the top band of this high volume area where a lot of the transactions are taking place, pretty much from 3.7k to 4.1k. As long as we're above 4.1k and holding it, I can't be too bearish, but the first signs of a breakdown is pretty much a breakdown below 4.1k. 3,850 is also a key level. And if the SPX goes below that, I think Bitcoin highly likely does go below 25, 23k, potentially 20k as well. And hopefully we hold above this 4.1k level. And it seems so far we haven't even broken down below this key resistance level really. And let's see if we can flip that as support and then make a leg towards 4.3k. A lot can happen. It's just about being up to date. And we have certain key news events as well. For example, CPI on Wednesday and PPI as well on Thursday, I believe as well. I also want to mention about this harmonic. It's a bat harmonic. Very often these can be respected a lot, and the target would be actually level C here, so 3.7k. So I would expect that somewhat near Q4, but these things can take a lot of time to play about. Harmonics are essentially looking at relationships of key Fibonacci's, looking at certain key areas, and sometimes they can become a self-fulfilling prophecy. Looking quickly at the Dixie as well, we can see this macro channel really. It's been going on for a very, very long time. It seems like we've been kind of flirting around the bottom end of this channel here. And the question is, do we hold above support? Perhaps if we get that run up to 104 here, that weekly level in the next couple of weeks, that might correlate with that initial breakdown in Bitcoin. below that key level of support and potentially move towards that 25, potentially 21k region as well. Question now is, do we attack this level first, or do we attack this weekly level first? And so far, kind of at a crossroads here, and let's see if we can kind of reclaim this as support, or do we kind of attack this as resistance and then fall back down. Looking at the total crypto market cap, I also spoke about how we're at this key level here, around this 1.27 trillion to 1.28 trillion, and it was a key level. It's also the 236 Fibonacci from the recent top to the recent local low. But on top of that, this is also a bearish structure as well. We have this harmonic, and this is a bearish structure, and I explained in the last couple of weeks, I don't expect us to get past 1.27 trillion in the first attempt, and so far it does seem to be respected. And this 1.18 trillion region is also key level, because it was the August 2022 high, and it seems like we could be potentially getting a breakdown here, and then potentially a back test like this. Question now is, do we have this breakdown? Question now is this some kind of retest, and then an eventual breakdown below? So that's something I'm also looking at and to be really careful of. And of course, this also ties with the Bitcoin dominance. And so far, we still are in this channel in Bitcoin dominance for a really, really long time. Initially, we had this false breakout above this top end of the channel and break back below. Question now is, do we eventually have a pull back to this support level around 236 and consolidate, and maybe make a leg up to the next key Fibonacci zone from maybe potentially this 382 Fibonacci here, around 52%, and that's taking the Fibonacci from all the way here to this local low here. Even from 2021, we haven't tagged the much anticipated 50% level in a really, really long time. It is inevitably going to happen. The question is when. And also be aware that just because Bitcoin dominance goes up, it doesn't mean that Bitcoin's going to go up as well. Bitcoin can still bleed, and Bitcoin dominance can go up. If you appreciate that Bitcoin dominance is a total market cap that's contributed by Bitcoin itself. This is now looking at the total crypto market cap excluding Bitcoin, so looking essentially the altcoin market cap total. And you can see here we've somewhat been in a channel here as well. I initially had this rejection across this top end of this channel roughly on this 665 billion. Question is, do we make the way to the midpoint around $545 billion? But we can also notice how specifically we had that sharp decline as well across the last couple of days since last Friday, which is also interesting as well. Something I also want to mention before we continue on is the CME gap left behind last Friday as well. Question is, does Bitcoin fill it? And this is the gap around between 29.1 to 29.6. And whether you like them or not, sometimes they can become a self-fulfilling prophecy. And sometimes they can fill when people least expect it. And this is also another thing. I'm not trying to spread hopium, but not to get too bearish as well. Looking quickly at the Ethereum chart as well. We spoke about last couple of weeks ago how we had this key weekly level around just under 2.1k. Initially, we had that breakdown. And an aggressive short entry was just shorting once we went back below this key level here. And by now, you would pretty much be locking in take profit one. That was the most aggressive approach, but a more conservative approach should have been having this breakdown, waiting for the retest, and then shorting. This was a valid setup, but I didn't take it because I was already in a head short of Bitcoin, and so I didn't want to be overexposed. And so yeah, you'd have to lock in take profit. And the question is, do we get a bounce now? As before, this is another harmonic, and this is also a bearish structure as well. But again, D can still change, and it can still be valid. And so we have to wait and see, is this the local cycle peak now for this particular year? And question is, do we then get a pullback to this eventually this next key level? I'm also going to look at the gold chart as well, which has been much anticipated for a long time, and a lot of people are looking at this. It seems like now we've potentially could be getting some kind of triple top potentially formation. We have this top around from 2020 and 2022, and 2023 is currently happening. Maybe you do get some kind of final push up, but you definitely would not want to be longing gold here because it's near local resistance. Next key level that I would really like to see hold is, of course, 1923 as well. We are also near the peaks, of course, from 2022 and 2020 August, and so that's something to be careful of as well. Looking at a more volume point of view, we can see how I've taken this volume snapshot from June 2020 to current price action, and this is essentially showing where most of the transactions are happening for gold, and it seems to be around this region here. So between 1785 and 1980. And this point of control is somewhat near this key level as well. It seems nice that we are holding above this 1980 level, which is a key sign of strength. But the first somewhat of a warning sign would be a breakdown below here, and then a retest the top band of here. And that might be some kind of potential short entry. In a very eerie way, this gold chart does somewhat remind me of 2018 price action. And 2018, we had this somewhat of these two peaks. We had this final peak here, and then a breakdown eventually. And perhaps it'd be interesting to see if we form a similar price action to this 2018 price action, and do we get that similar kind of triple top formation, which is not going to be exactly like this, but it'd be interesting. And then we've had that final capitulation event for gold. Just also touching on the long to short ratio of Bitcoin as well. This is just showing the habits of really degen retail traders. And it seems that up till now here, as we can see, the trend has been going up. And it shows that majority of retail, specifically on Binance, have been net long. And so in other words, they're more inclined to believe that Bitcoin is going to go up. And generally speaking, most retail traders lose money in the long run. And in terms of that, looking at this, and we can also see this increase in open interest, which is generally seeing that more and more retail are opening long positions. And so it has not been surprising in some sense we've had this recent dump here. But now it's been nice to see that we've had this bit of a decline now in the long to short ratio of retail, and the open interest has been going up slowly as well. So perhaps there could be some kind of closing of positions, maybe some retail that are a bit more stubborn are not closing positions, and naturally we've had this pop up. But the question now is, do we revert back? And it would be nice to see perhaps overall the long short ratio going down and the open interest going down as well, perhaps indicating that retail are not going to be too heavily net long as well. And so these are just things I'm looking at. And it has been interesting how the top traders on this as well, they've been more or less not as extreme. They've been more towards net short / net long, but really marginally. It's been more neutral, really. And so there's a bit of a divergence, really, between the top traders and the retail traders. Yeah, but guys, that's all I have to talk about today in this quick market update. Do check out my YouTube channel. This is where I post my passion for trading and crypto, and I post my market updates and really tips to really improve your trading. Well, thanks a lot, guys, for watching, and I'll catch you in a bit.